Hey, folks, my guest today is Suzanne Laritzen. She's professionally brought up in the tech consulting and dot-coms of the 1990s. She's the founder of LogBuy in the early 2000s, an employee engagement platform, which was fully acquired in a split sale back in 2016, 2017, at which point her co-founder and her were the sole owners. Today, she's the CEO and co-founder of venture-backed Raffle.ai, inventing the future of enterprise search based off AI. Suzanne, you ready to take us to the top?
Yeah.
All right. So this is your second or third or fourth swing at it with some successful exits in the past, correct?
Yes, it is
Okay.
the
What
third.
what does it mean to empower your search with AI? Search for what? Who's using this?
Employees are using it. Customers are using it on the website of our customers. So it's basically just the search that can find what you need, like Google can find what you need for consumers. We make the same search available for corporates.
Okay, very cool. And remind us, I believe you founded this back in 2018, right?
Yes,
Okay. And
that's
do
right.
you remember? I didn't ask you last time we spoke. Do you remember back in 2018 what your total revenue was your first year in business?
Oh, no, it
Did you
was
have
very,
any?
very limited. No, I think we had maybe a bit of uh, POCs going on, but it was very limited.
Yep. Yeah. Okay. Very cool. And then tell me about customers today, right? So you told us about your customers back in October 2020, but Nate, can you name any customers paying you today?
Yes, we have Coop as a customer. We have Eon as a customer. We have Visma as a customer. We have Ilva, which is like IKEA. So we have lots of different kinds of customers, both within insurance, banking, B2B software, and e-commerce.
And how many total paying customers today?
We have around 50 total,
Holy
big
cow.
corporates. We have more customers than that, but paying customers and big corporates like enterprise customers are 50.
It's impressive, Suzanne. I don't know if you remember back in October 2020, you told me you had about seven. So
Yes.
you've significantly grown since then. Now, has your average contract value changed as well, or is it still about $35,000 a year on average?
No, the contract value today is about 25,000 euro. No, sorry, dollars. Dollars. $25. $25,000.
Per year?
Yes.
Okay. So maybe gone down market just a smidge. Is that an intentional strategy or that just happens to be the customers you closed?
No, yeah, it's intentional. I think we'll probably even go further down because we are targeting also the medium segment today and not only the enterprise market. So that's intentional.
hmm Now, if you have the 50 customers at a $25,000 ACV, that means you're at doing what, about 1.2 million in terms of run rate right now?
Yeah, a
Somewhere
little
around
less.
there.
Yes. Yeah.
Yeah, 950, a million, something like that. You're about to pass $1 million run rate. We'll put it that way.
Oh yeah, we have passed a million.
Okay,
Yeah.
you're past a million. Fair.
Yes.
That's very exciting. So you've done this. I do believe you've also raised some capital. Tell us about your last funding round.
Well, our last funding round was about $3 million dollars. But right now, actually, we're in the middle of an A round. I can't tell you any more about that, but I can on Wednesday. So it's closing on Wednesday next week.
Oh,
So
very
that's a
exciting.
really big round.
Oh, what's going on there, YouTube? Good to see you guys. Now, imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right. So the teal is what a VC would pay. Yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise. They sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. Don't share anything you can't, but about how much do you think they'll end up being for range? And just to be clear too, we're recording this on January 12th. This will go out on February 25th, just for timing purposes.
Yeah, but the thing is, I don't know if I can reveal that until Wednesday. So I know that's I don't know what I can reveal, but I'm happy to tell you later on, and then you can clip it in or whatever.
That's no problem. We would love to do that. Let's talk about the strategy behind the raise. Why do you need the money? That obviously comes with dilution.
Yes, we need the money to scale European-wise. First of all, it's actually going to be an American. It's a US venture capital firm. So eventually we'll also go to the US. But I think we'll wait 1 year to do that and just scale in Europe for now. So that's what we need the money for. It's basically sales. Yeah.
And most folks, Suzanne, in their Series A are selling 10 to 20% of the business. Were you sort of in that same range?
Mm-hmm. Yeah.
Okay. And do you have to set up an employee stock option pool afterwards, or did you already have one set up anyway?
We already have one, actually. We do have a warrant program, an exit warrant program.
I don't know what that is. How does that work?
It works the way that you have the option or you have warrants that will be released the day that we actually exit, which is the day where we sell more than 50% of the company. So you have to stay to the end, so to speak, or to the day that we exit to get value for that money. If you don't stay, you will lose it. So it's basically a way to say to people that we really want to stay on board for the long run.
Mm-hmm.
Yeah.
And what are those called? Sort of what warrants?
It's an exit warrant program.
Interesting. I like that. I have not heard that before. So that's interesting.
It's just a warrant program, and it's just exit based. So I think yeah, exactly. Most people would probably just say it's a warrant program.
Yeah, fair. I like your idea better though. That's kind of fun. Okay, talk to me about the customer growth. How have you gone from 70 to 50? Where are you getting these customers?
It's in the Nordics primarily, but we've just scaled the business. We have been much more clear in the vision now. We have a product now that can scale very rapidly, and also we can now implement the customer within 2 days, which we were maybe 2 months doing. Just 1.5 years ago, it would take us 2 months to actually implement a customer. So it's just more rapid now. It's a clearer vision. So.
And how many folks are on the team full time?
20 is on the team full time, and then we have 8 part-time employees as well.
How many engineers?
We have 12 engineers on board.
Okay. Now, back in October of 2020, you told me you had about 23 on the team. Did you have to let some people go, but still have that revenue growth, maybe because of COVID or something?
No, I think what we calculated at that point was also the part-time employees. So
Okay.
we haven't scaled that much. We've scaled about 5 full-time employees since then, and then some part-time employees as well.
I see.
But still, we have grown 305% in revenue or in ARR
Yeah,
since
I mean, I
then.
don't care about team growth. I care more about revenue growth. I'd rather you build a
Yeah,
billion-dollar company with one person on it, you know? Um,
exactly.
have you changed anything about your sales motion with your sales reps? Last time you told me you had 5 quota-carrying reps and their quota targets were set at about $420,000 of new ARR per year.
hmm It's the same.
Okay.
It's
So
basically
that's
the same.
working.
Yeah. But well, I wouldn't say that it was working perfectly before. It's working perfectly now.
And,
So that's the
and what
difference.
did you have to make any changes to make that happen or no?
Yes, I think the product has developed so that it's easier to implement, as I said before. So it's also easier to sell because it's a box product. It works off the box, so it works the same day that you actually get it. And you don't have to train on the AI anymore. You did before, and then I mean, it's just we are also more mature. We have a bigger brand today, so it's always, as time goes, it will always be easier to sell the product as others have. If your neighbor has it, you want it. So it's basically about that, I think.
No, I love the story. It makes a ton of sense. Now, you've mentioned these exit warrants. You've talked about the 3 million seed you did. Now, was that like traditional seed round? You sold, 20% of the business back
Yes.
then too?
Yeah.
Okay. So it's like what 15 million valuation, something like that.
Yeah.
Okay. Interesting. And were you the sole founder prior to that?
No, we are two founders owning, equally much, and then we have some investors from the very beginning that were angels that threw in money in pre-seed,
How much was that
and then
on what
after
year?
that was in 2000, that was already in 2018 actually.
Yeah.
So they threw in, I would say it's about 300 uh 300K US
Yep.
from the beginning, and that's what we lived from, so to speak, for the first year.
Yep. So is
So
it fair to say sort of investors now today own about 40 before the Series A, own about 35% of the business before the
yeah,
current round? Yeah.
that's fair. Yeah.
Yeah. Yeah. And then you guys, how much have you reserved for employees?
We have reserved 9% up
Okay.
until now. Yeah.
Pretty fair. You'll probably increase
Um,
that after the Series A.
yes,
Yeah.
exactly. We
Yeah.
will.
Can you share what you're increasing that to or no?
No, because I'm not really sure yet.
That's no
It's not been
problem.
said.
That's no
Yes.
problem. So 35 to investors, 9 for employees. That means you and your co-founder own about 22% each as of
Yeah,
today.
that's a very good calculation. Yes.
Okay, very cool. That sounds like you're managing the cap table in a super healthy way. It'll be fun to see what you do with this new capital in terms of investing in sales and marketing. When you say move into the US market, does that mean literally opening an office here or hiring sales reps here or what?
But not. I don't think we're going to do it right now. I think we're going to do it in 23.
Hmm.
So we are first going to expand in Europe. We have plenty of room in Europe. We have the whole Nordics, which we are not. We are only beginning there, and then we have Germany, of course, and the UK and the Netherlands that we're going to focus on.
Very interesting. Now you have a high ACV, which means you could have a high CAC as well. What are you spending to get a new $2,000 a month customer? Do you know?
Yes, our LTV over our customer acquisition cost is 5, I think, at the moment. And that is only because we have an LTV only on 3 years that we calculated with. So I've learned that 5 years is actually normal. So basically, our the formula should be better. But we're quite conservative in that sense. So
Yep.
5 from a conservative point of view.
Yep. Fair enough. And if you're managing and you think your annual contract values are somewhere in the $25,000 a year range multiplied by 3 years, you get up to about $75,000 there. So you're telling me that you're totally comfortable spending 15 grand to acquire that customer, a 5-to-1 LTV to CAC.
Mm-hmm.
Where are you spending that money? Is it on the sales rep commission or something else?
Right now, we only do direct sales, so it's primarily actually just on salaries. So and of course commission bonus and stuff like that, but not so much on the marketing side. We're going to focus on that a lot more in the coming year, and also the branding, of course.
Yeah, net dollar retention above 100.
Sorry?
Do you know what your net dollar retention is? Is it above 100?
I don't know.
Okay.
I actually saw that question. I don't know. I had to ask my accountant, I think.
That's funny. You're referencing the Latka SaaS report that you filled out. And I was like, and you're going, what is this? What do you mean net dollar retention?
Yeah, exactly.
Yeah. You guys will get to that soon. You're growing so fast right now. You probably don't even have time to think about it, but it's a great story, Suzanne. I hope you come back on in a year, give us another update. In the meantime, though, today, let's close out with the famous 5. Number 1, favorite book.
Well, I think it's still Think Fast, Think Slow.
Yeah, you're consistent. Number 2, is there a CEO you're following or studying?
No.
Number 3, what's your favorite online tool for building raffle?
What is my favorite one?
Online tool.
I don't understand the question. Sorry.
a tool that you use, like a tool, like Google Docs or Slack, Twilio, HubSpot. A favorite online tool that you use?
Yeah. Okay. We use HubSpot. We use Slack. We use a lot, but I don't know if they're favorites. But yes.
Which one do you use the most?
I use HubSpot. I'm sales.
Right. All right. Number 4. How many hours of sleep do you get every night?
I get 7.
Okay. And what's your situation? Married, single, kiddos?
I have a boyfriend and I have kids. Yeah.
Not married, 2 kids, right?
2 kids, yeah.
And have you had a birthday since we last chatted? You're looking younger, but I have to ask.
Oh my God. I am 50.
Happy birthday. I was going to say, you said 48 last time. So 50s, right? Happy 50th. That's exciting. Don't look a day over 30, Suzanne. All right.
Yeah. Okay.
take us home. Something you wish you knew when you were 20.
Yeah, I think I would probably tell myself to relax a bit more, but I still don't. So I guess I'll live and learn.
Guys, there you have it. Raffle.ai is AI-powered search for the enterprise. They've got 50 paying customers that pay on average $2,000 a month. So $90,000, $100,000 a month right now in revenue. Just broke $1 million run rate, up from $20,000 a month back in late 2020, scaling nicely. Raised a seed round back in 2020, $3 million on a $15 million post-money valuation. About ready to close a Series A. Look out for that announcement here soon as they look to scale in the US. Suzanne, thanks for taking us to the top.
Great. Thank you. Thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com /Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.